Chinese economic data is weighing on stocks. Although GDP expanded in the first quarter, sluggish retail sales and employment numbers are making investors nervous over the future prospects of the world's second largest economy.
We must be aware that with the domestic and international environment becoming increasingly complicated and uncertain, economic development is facing significant difficulties and challenges.
For more on this now, let's go to Einar Tangen. He is an independent commentator and senior fellow at Taihe Institute. Many thanks for being with us today. Einar, first of all, we are seeing both positive numbers when it comes to GDP, but really negative when it comes to retail sales, but also unemployment. Why in the first place? And do you think we're going to see negative numbers only in the next quarter?
Well, I don't know that we're necessarily going to see a lot of negative numbers. Remember, I mean, China's place in the global supply chain is very unique. I mean, it's literally the factory of the world. If you have any demand in Europe or America, or you have things that you have to replace, a large number of those parts are going to come from China. As we've seen in the past, the amount of trade, especially with the U.S., has been increasing as they have been deploying stimulus money. So I don't necessarily see that to decrease in terms of the exports, not in the near term. Long term, yes, as global demand starts to falter due to the situation with Ukraine, that's going to be a problem. Internally, yes, China does have an issue. They signaled that in their annual report where they expected employment to be a little bit higher. We've seen a lot of the tech companies laying off. But there's hope that internal demand will be stimulated by a number of measures that are being put forward by the government and to try to pick up the pace.
Interesting. So you've been hinting at China's role in the global supply chain, especially in these last few years and especially during the pandemic. So what will be and to what extent will this China's zero COVID policy really impact global inflation moving forward?
Well, obviously, any kind of shortage is going to have a bad effect. I mean, it's going to increase inflation. But the core cause of the inflation, and the most serious part of that, has to do with food and energy. And that's not really where China figures into the equation. They're users of both. So right now, it's one thing when I can't buy an Apple Watch. It's another thing when I cannot feed myself and my family. So very, very different. China was very able during the beginning parts of COVID, in essence, take its medicine, take these 3-week lockdowns, and then keep the economy running. Now it faces the second wave. I mean, remember, COVID is evolving, and you have to evolve your responses. They are now developing these bubbles where they allow factories to have their workers on site where they stay and allows them to continue producing. So they're going to continue to do that, but at some point they have to switch from a pandemic response to an endemic response. And that's basically what you've seen other countries do, although probably not as well as China has.
We'll see what happens to the zero COVID policy then. Einar Tangen, many thanks for being with us today.